stock market morning prep video for Thursday, July 31st. A little bit of a mixed picture yesterday. Dow Jones was down 31. Nasdaq ended up 20, and S&P virtually flat, up about 12 cents. Russell eked out another gain, up $4.93. We talked about repetitive patterns yesterday, how it does look like the markets want to move higher again, creating these series of bull flags. And we also showed you the transportation sector, how every time it hit new highs at the upper end of the channel, which I'll show you again in the charts, it liked to fall and roll back down again. So kind of a rolling over effect. So repetitive patterns work really, really good. And as a technician, you want to really analyze that and look back in history and see what happens when this pattern usually takes shape. Now, we have non-farm payroll numbers coming out tomorrow. We also have the Challenger jobs today, which is a little bit, what do you say, a little volatile in the number itself. Last night, though, we had something interesting, and Argentina's bank is in default. So futures are down pretty good, about 13 and a half handles. Crude oil is also down too. But again, this market, the way the market just continues to creep up, it's going to take some sort of a risk event or a geopolitical event to happen to really let this market come off and let it really correct. And it's going to be very healthy for the markets to do so. Excuse me. Now, yesterday we had GDP numbers come out at 4% versus 3%. Rallied the market a little bit, and then the market started to roll over. Now, to me, I actually thought that could be the catalyst that we wanted to see, that the markets push up to about 1990, upper end of that channel, to 2000. And right now, it's not showing that. It's not the case at all. That just puts more evidence into my thesis that the markets are extremely stretched, and we all know that. I mean, that's not the issue. But what I was saying is touting that the longs are so tired. When you buy a stock or you're trading it intraday, you really don't get much movement. And, when you're getting a quarter when you were getting 60 cents, and that's what I really mean. That you could just see that the longs are just exhausted, but there's no shorts out there, so that's why you have to be ultra selective and try to look for something that has a catalyst, an earnings downgrade, an upgrade, what have you, but something that has a little bit of volatility. Because now in the doldrums of summer, we have no volatility at all, and we have no sellers. So it's a little bit difficult if you're really trading hard, and you shouldn't be right now. You should be taking a cue of what the market is giving us, and right now it's saying take a step back. The time will come. Now I mentioned before that, I also mentioned that the markets, I think there's going to be a bigger drop in the markets within the next few weeks. So let's say 3 to 6 weeks. There's going to be a bigger move, and I do think it's before the summer ends. It just looks that way, and I want to show you real quickly some of these indicators and what I follow, and the reason why I think that the markets are headed for a little bit of a tumble. Aside from the fact that, of course, we're extremely overbought, now it's just a matter of timing, right? Well, the bullish percent is extremely reliable. It comes off a point and figure chart, and these are lines that every time it hits, it usually reverses. And there is a little bit of chop to it here, and then here, and then here again. I left this open just to show you. And I mentioned that every time it gets away from this moving average, it usually will test it one more time and then really start to dump. Now, this is exactly my point. See this here? We get away from it, we test it, and then we really go higher here, in this case, to the long side. And you see how we're away from the average? Well, this is exactly what I think is happening now. I think the markets go lower. And much lower, the bullish percent will start to break down and give us a full-blown sell signal. Now, what I'd like to see in a perfect world is the markets go higher one more time. I'd like to get everybody back in the ball game to the long side and let these algorithms push this market higher, and then really maybe this signal line touch the 8 and then really fall off. That's what I'm looking for. I don't know if it's going to happen now. Remember, because every news trumps the charts. So now we have bad news coming out of Argentina, no bailout, we couldn't help you, and now the banks are defaulting. That's not a good sign. So that'll put pressure on our banks, who has exposure in Argentina, and that's what you want to look for if you're looking to trade that. You want to look for what bank here has exposure in Argentina, and then you would look to trade that. All right, let's take a look at the advanced decline with the volume. telling you not at all what this is telling you. Markets are higher. This is not making lower lows, lower highs, and this is included with volume. So this is the advanced decline line, not looking too good. And we take this little area out, we start to really dip. Then that's going to give us a little bit of a cue that we're going to start to sell off a little bit. Okay. Let's take a look at stocks above the 50-day moving average. Right up in this area, boom, we're starting to break down. So we have the S&P, stocks above the 50-day moving average, selling off. S&P really hasn't moved. So this indicator is telling us that we see a sell-off in the near future. Well, now it's just playing catch-up with the S&P. Okay. Let's take a look. NASDAQ stocks above the 50-day moving average. This really hasn't gone anywhere other than a little bit of a move lower. But when you see this little area here, look for that sell-off, that spike down below 50, and that's what we're looking for. And you want to buy the dip. Excuse me. Now is not the time. You want to really see this McClellan oscillator way, way, way down here, and then one of this scenario plays out. A little dip, a pop higher, maybe another big move higher, and then another dip lower. So you want this to come down below and really get to the extreme. Down below 80 is really where you want to be, 70, 80, and stay there. That's where you want to look for. And then what you would be doing really is just buying the dip for that retracement rally. And then, again, if the market corrects, we would be in some sort of a short-term downtrend. Okay? Now let's take a look quickly at the indexes. Repetitive patterns like I was showing you yesterday. Now we're at the middle of this trend line area of support. This is going to need to hold for at least another move higher. If this does break the 200s right down here, all bets are off. And then I think we start to correct down to that 1900 area again, like we were talking about, somewhere around here. And we're still above the 1272 extension. So we still there's plenty of room to go to the downside now, but there are support areas here. This is going to be a big area of support here. A lot of activity in this area here. So 1840, 1880 is a lot of activity. So just something to think about, when you're looking at this. But the index is really telling us a little bit that we're headed a little bit lower. You see the 50 on the diamonds really starting to break down now. And then take a look at the IWMs. This really is going to tell a picture today. Watch this, because now we have another bear flag here, right? We talked about repetitive patterns. We have another bear flag, and this does not look good, right? We broke down, and now we have a flag, and then we broke down again, and now we have another flag. So if it takes out to 200, be careful, because the next flush would be down to this area, this short-term low of 107.30. And I think this is something that really needs to be watched closely during the trading day. We have the transports, as I mentioned here, repetitive pattern. We broke down, and now we're sitting at the 34 moving average. 50s right down here. And again, my short-term goal will be to test this, and then ultimately down below this triangle. Okay. Remember, guys. I mean, this is just really unsustainable. I mean, we've had a couple of small down days, even in the marketplace in itself. Lastly, is the Qs doing very, very well. But again, you have to watch here, because anything could happen here. Okay, be very careful. Let's see if this market, the dips are being bought. If that does happen, then we should be looking pretty good here. Once the dips are bought, let's run up. Looking for that 1990, and then I'm looking for further downside once we get to that area. That might not even happen. Just remember, this might, with this Argentina news, and then if we get some continued escalation coming out of Russia and Ukraine. Remember, right now the markets have just totally discounted that, but that will change when the markets realize that this is getting really bad and getting out of hand here. Then you'll see, I think, the markets start to react. All right. Have a great day, everybody. We'll speak to you tomorrow. Take care.